Hello and welcome to Getting Started with Technical Analysis, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I'm joined today by my good friend Brent Moores, 20-plus year veteran of the financial markets, out there in the chat to help you out answering specific questions in this discussion today. And by the way, I'm filling in for Barb Armstrong, who's going to be teaching this particular webcast on a regular basis. So thanks for joining me. Whether you're here in the live version, whether you're here in the recorded version, we're glad to have you, and we're excited and grateful that you are our clients and our attendees today. Now, we're going to jump in. We're going to talk a little bit about technical analysis, specifically about the concept of what is a bounce? What makes up a bounce? What are some of the considerations when looking for a bounce? And so we'll explain all things bounces and talk about that as we get into this discussion. Though, a couple of quick housekeeping items we want to make sure that we take care of. And the first of those is making sure that you're aware that you've got that chat out there in the YouTube page that you can chat in your questions. That's what's that is what Brent is going to be helping out with. If you're watching in the recorded version, please leave your questions in the comments section, and we will address those on an ongoing basis. Second thing, remember that everything we talk about, simply for illustrative and educational purposes only, it is not a recommendation. It is not advice. It's not any kind of a specific recommendation about securities or strategies or anything else. Remember, investing involves risk, including the loss of principal. Now, we're going to obviously be talking about technical analysis today because technical analysis, I mean, that's right in the name of this particular webcast. In fact, getting started with technical analysis is a great place to start, right? But it's theoretical in nature. It doesn't guarantee what's going to happen. It doesn't predict the future. And so Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Of course, remember that past performance no guarantee of future results. Now, we're going to talk perhaps about stop orders as they relate to bounces today as well. Remember that stop orders don't guarantee the fill price, just the activation price. And same thing with stop limit orders. We can specify the activation price, but in the event of stop limit order, there is even the potential for the price of the stock to bounce or to gap around that limit area. So be aware of that fact. Now, we're not going to likely talk about options here, but I just wanted to remind you of this. Remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering trading any option strategies. Now, we're going to be using the thinkorswim desktop software platform. It is not a guarantee of future results out there in the real world. It's a great learning environment. It's a great sandbox in which to practice a variety of things, but it doesn't do some things that a live trading account would do, including allow traders to use studies in scans. Now, we may get into a couple of scans here, but I'll point out any differences between the paper money platform and the live trading platform as we get into that discussion. So I'm going to do this. I'm going to pop over really quickly with a nod to my good friend Brent Moores. We're going to pop over to the thinkorswim desktop software platform, the paper money version of which we're using today. We're going to take a look at the market, just kind of get a sense of what's going on in the market, because we've had a little bit more volatility in the last couple of weeks than we've had really in the last few months when it comes to kind of that up and downedness. And when we have up and downedness, as I sometimes will call it, that typically tends to mean that we have more bounces going on. In fact, we've probably had more support bounces that perhaps have maybe even frustrated technically driven traders in the last little while that we've seen in quite some time. Taking a look at the S&P 500 here, we can see that 50-period moving average here, that simple moving average, kind of going sideways, still rising a little bit, which would suggest that we're still in a long intermediate term uptrend, but price seems to be kind of oscillating up and down around that 50-period moving average on the S&P 500. So we've seen a bounce and maybe a bounce down and a bounce down. We'll talk about those bounces as we get into this discussion. That's really going to be our focus in today's discussion. The other thing I was happening to notice as we were looking at this is that the RSI, that relative strength index, the momentum gauge, if you will, for the market and for any instrument that you happen to apply the RSI to, seems, at least at the moment, to be kind of winding up into a little bit of a coil. And whenever anything, whether it's price or whether it's an indicator, tends to wind into a coil, that means a couple of things. One, you're likely to see more bounces off of levels of what would be potentially support if it's price. You're also likely to see kind of a consolidation, if you will. We're kind of narrowing that range. And so as investors and traders kind of come closer and closer together on their perception of where price should be, of where momentum should be, that's why we're kind of seeing these winding ups, if you will, into these support and resistance levels. You can see the wind up on price corresponding with that kind of wind up on momentum. Both are kind of diminishing, and that necessarily doesn't mean that price is going to just go sideways. Oftentimes a consolidation or a squeeze like this means that price is going to pop one direction or the other. So we can potentially gain some insight from what's going on with the RSI. If this RSI were trending down, meaning making lower highs and lower lows at the same time, some traders might be more worried about this consolidation in price. But the fact that the RSI is squeezing, it's making higher lows and at the same time lower highs, would suggest that momentum isn't necessarily just falling off. Momentum is just kind of winding down. And when we see momentum winding down, when we see price consolidating down to levels of support or back up to levels of resistance, now as a technician, some traders or some technicians may start to look for entry points into a trade once that momentum kind of shifts back into a bullish direction or into a bearish direction, depending on which direction they happen to be trading the particular position. So this is an area with this kind of consolidation kind of winding up into this symmetrical triangle, if you will, that is conducive to bounces, but it's also conducive to failed bounces. Because if we don't have a bounce followed by a breakout or a solid breakout, maybe of a diagonal or a horizontal trend line, then is it really a bounce? And so that's one of the questions that I want to address as we get into this discussion today. So SPX kind of winding up. Let's take a look at the NASDAQ, and the NASDAQ winding up into that little bit of a symmetrical triangle as well. Although maybe this is perhaps a bit more of a short-term descending triangle, depending on where you draw the line. And again, remember, lines like this are drawn in a discretionary fashion. But this is what I was talking about with the RSI on the NASDAQ. Notice what's going on with the RSI on the NASDAQ is we have maybe a little bit of a falling wedge. Now, here's the thing. Falling wedges, when it comes to price, that type of pattern where your resistance level is declining, but your support level is declining, but not quite as much. Oftentimes that can be bullish for price, but with the RSI, maybe not so much. Again, this is more of a downward trending RSI with price moving down than, say, for instance, what we were seeing on the SPX. Now let's take a look at the Russell 2000, because we have kind of almost the opposite scenario going on here. We have a bit of a potential reversal pattern on the Russell 2000 in the small caps. And if we were to draw a level of support there, we've got kind of this weird looking ascending triangle, right? Sometimes referred to as I refer to it, Pat Mullally and I talked about this as a milquetoast ascending triangle. It just doesn't have a lot of conviction behind it. Now, on the other hand, we take a look at where the RSI is, and the RSI is starting to trend up strongly. It's making higher highs and higher lows, while this stock or while this particular index is making equal highs but higher lows, and again, squeezing up against that resistance level. So how does this relate to bounces at all? Well, take a look at what's potentially going on here with the Russell at the moment, right? Finding that level of support. It's bounced down from resistance, and in the same candle, it has bounced up potentially from a level of support. So that's what typically tends to happen when, especially we get down towards the apex, of these kind of consolidations, right? Is you can sometimes kind of get wound up into kind of single candle moves, bouncing up and bouncing down, bouncing up and bouncing down. And at some point, something's theoretically got to give. Yeah, Dragon Rider, it's typically spelled MILQUE toast. Milk toast. And I'll just put that in the chat there so you can look it up. Milk toast. It's just a non-committal kind of not really intense. If you think about what happens when you put toast in milk, I think that's kind of a literal description, right? It kind of softens up and gets kind of flimsy, right? Milk toast breakout, or a milk toast ascending triangle here. There you go. All right, now let's take a look at a couple of individual circumstances that might help to illustrate this idea of a bounce and what it is that we're talking about. So I've got a couple of examples here, and I want to pull them up here really quickly. Now, a couple of you and let's see, let me pop back up here. I think it was Randy Shoemake who said, hey, running into bounces where the moving average is perhaps moving in a downward direction or kind of been declining for some time. And that certainly is a point at which a stock might turn around. That's a point at which a trader might be looking for a reversal type of pattern, maybe to look at getting into a trade. Now, we can argue getting into a stock that's already moving in an upward direction, it's already got an upward trending moving average, versus the idea of getting into a stock that has been moving in a downward direction that might be bouncing and starting, right? That's the idea of what's better, right? What's better, a bounce or a flag type of pattern or a move upward in an already established uptrend, or catching the first bounce of a potential new uptrend. And so we'll talk about some of those ideas as we go along here. But the example that I wanted to bring up was J&J, Johnson & Johnson. And you notice what's going on here. And in fact, today, the reason I brought this particular example up is because it is a fairly clear example of a reversal pattern. So to satisfy Randy and a couple of other questions here, I'm going to put on the chart, though, a simple moving average. I'm just going to put on a 50-period simple moving average. That's kind of an intermediate term length moving average. We'll go 50 periods or 50 days in this particular case. And I'll make that a little wider just so we can see. I'll keep it that nice happy blue color. We'll click on apply and OK. And so we've got that downward trending 50-period moving average. Hey, thanks, Ranjit, for looking that up and giving us the dictionary definition of milk toast. A timid or meek or unassertive person. All right, there you go. So we could say a milk toast ascending triangle is a timid, meek, unassertive ascending triangle. There you go. Hey, thanks, Brent, for reminding me. Good opportunity for me to remind you to click on that subscribe button down at the bottom of the page on the right-hand side there. It's the square button that says subscribe. That's going to keep you connected to the Trader Talks webcast channel as well and keep things going. Help you to keep in touch with new archives and new content that's posted. And it's an easy subscription. It's at no cost to you. All right, so here we have now this downward trending stock, right? But now something different has happened, right? We could make an argument that if we go back left, we had a level of support back here earlier, kind of in that April-May timeframe. And that level of support has been touched once again. Once, twice, and in fact, even 3 times we see a little bit of a bounce down along that support level, right around that 143 mark. So what I'm going to do, now that we kind of have the picture here for Johnson & Johnson, right? Let's kind of establish kind of what our setup is. The setup is this is potentially reversing off of a longer-term support level with the possibility of a short to intermediate term upward trend. We're not talking about now reestablishing a new longer term uptrend necessarily. That would come a little bit later. But in the moment, as we look at this, we're looking for a short term potential reversal to the upside. And if you remember, and we've talked about this, we've talked about it in the live workshops, we've talked about it in a variety of different webcasts, that a reversal pattern is a downward trend, a bullish reversal pattern, that is a downward trend that comes into a level of support and finds some series of bounces along either a horizontal or some kind of diagonal level of support, and then it reverses back up. And so the key elements are that it finds some level of support, that there is a level of resistance that we can point to that now gives us, if that's a high, now this is a new higher high, right? That's what becomes a bounce. But what also is critical is identifying what's going on when that price gets down to that level of support, because we'll see in another example that I'm going to show you here in just a minute, an example of a failed potential bounce off of a level of support. So I'm going to clear those annotations here really quickly, and we're going to come right back here. I'm going to zoom in a little more closely onto this right-hand side so that we can see what's going on. And you can see what's happening with the price of this stock. It has found that level of support. It's rallied up, it's pulled back again, and it's bounced, and then it's rallied back up again. And to be honest, I mean, if we were to draw a line of resistance overhead, we're just knocking on the door of that today with this big bounce candle, right? This big green upward moving candle. But the whole point of this particular price pattern is to establish evidence that the price of the stock is turning and going in the direction that we want it to go, right? Otherwise, why would we be looking for a bounce? What's the importance of seeing a bounce? Well, we want evidence that the price is moving in the direction that we want it to go, right? So, you know, here's the thing, and I've talked about this in live webcast, in live workshops. I've talked about it in other forums, and that is the difference between buying when a stock is still moving in a downward direction versus buying when there is clear evidence, or entering a trade when there is clear evidence that the price of the stock is moving in a bullish direction, right? In the direction we want it to go. Otherwise, are we just buying downtrending stocks and hoping? And I heard a joke the other day. As a matter of fact, we were just in Dallas doing a technical analysis and option strategies workshop, and somebody came up to me afterwards and told me the joke. So I'm going to repeat it to you. And the joke is this: there's a fundamental analyst and a technical analyst, and they are in a bar and they are arguing about price movement, right? They're arguing back and forth about price movement. And they're getting a little heated, and they're kind of shoving each other back and forth, and they happen to shove each other, and they bump into a server who's walking by, has a tray with a cutting board and a knife, and the knife falls off of the cutting board. And the technical analyst jumps out of the way and avoids the knife. The fundamental analyst watches as this knife falls and stabs right into their foot. And the technical analyst says, "Why didn't you get out of the way?" And the fundamental analyst says, well, I was hoping that the knife would stop and turn around and go back up before it hit my foot. So some of you have kind of heard that before. Some of you have heard us talk about this before. The idea is this. If we're a technical analyst, if we're using technical analysis, we want clear, established, solid, empirical evidence that the price of the stock is making that move to the upside, right? That's what we're looking for as a technical analyst, right? Okay. So now here we are. Do we have a bounce on Johnson & Johnson? And so there's a couple of different ways that we can define this, right? One of the ways that we can define this is a new equal or higher low, number one. Number two, followed by a new equal or higher high. And probably most appropriately, a higher high. So I would argue this, just in general terms, that at the moment, we have an equal low relative to this low, relative to this low, relative to this low, and we have a slightly higher high, although it hasn't closed at that point. And some traders may wait for a close higher than that previous high, our previous high being that intermediate point, right? Some of you saying, hey, Ted, and a few of you saying, hey, looks like a double bottom, looks like a W pattern on Johnson & Johnson. You're absolutely right. It is that potential, right? So is there bullish evidence here, or is there evidence in this particular case of this breaking higher, moving in an upward direction now? Well, there's certainly evidence that perhaps it has stopped falling and maybe it's turned around. Not that we were taking the fundamental analyst approach and just hoping that it was going to do that. We were looking for it to bounce and maybe turn around and go higher. But there's another way that we could define this bounce to kind of help understand where this move is going on, right? Where this move becomes evidence of a reversal. So for that, I'm going to zoom in a little more closely here. And no, Wiley, I don't have volume on the charts. I don't typically tend to use volume a lot when we're using levels of support and resistance like this, because on a daily basis, volume is not as helpful as it used to be. I've done a couple of classes on that, a couple of webcasts on that. So you can go back and look at the archives and I'll show you where to find those if you want to dig into that discussion. But here's what I wanted to think about, right? So here's our previous high. I'm just going to use my magic marker to kind of line these things out. So here's our previous high right there. Okay. Price came down. It made a new low. Price went up. It made a new high. Price came down, and it's been making kind of this series of lows and highs kind of in this pattern. But what I noticed here is that there are a couple of things going on. This low right here, right, becomes kind of the lowest low in this pattern following this high, right? So that establishes our low day in this pattern. This is the lowest candle. It doesn't have to be red. It doesn't have to be green. It's simply the candle that has the lowest low. And let's look at the numbers here real quick. So let me just hit my my delete. There we go. I'll take that one out. So this low right here, whoops, let me put it back on the cursor. This low right here, if we come up to the top and we take a look at it, is 142.93. So what I'm going to do is I'm going to come up here and we're going to just do this in our scratch pad. Low is 142.93. Okay. No, that magic marker is a WebEx tool. It's in our presentation software, not in the Thinkorswim platform. It would be nice if we could do freehand drawings, but we don't have a freehand tool in the Thinkorswim platform. So our low is at 142.93. That's where we know our new low is, right? And the high of that low day is this. High of low day. If we put our cursor on it, our high of the low day is 144.82, 144.82. Where I'm looking for that is right up here at the top of the chart in this open, high, low, close data that's presented up at the top. So what I know is that the high of my low day, the high of my lowest point, is this high right here at 144.82. So what I'm going to do is I'm going to draw a line right at that 144.82 point. And the reason that this is significant is if we were to take this as a microcosm, right, of this kind of pattern that the stock has been establishing over the last 2 or 3 weeks or so. This is now a high and a low and now a new higher high, right? So what we've established is a low and a high and a low and a new higher high. So what I'm looking for, and Art is kind of presaging this a little bit in terms of asking about Cahold, but what we're looking at right here is this. Let me just put this in our, I'll put this in. So this is close above high of low day. Close above the high of the low day, or in other words, Cahold. Close above high of low day. And I'll just put that in here, and we'll just move that into place so that we can reinforce what we're seeing. It's an acronym. It's descriptive of this circumstance that's occurring here. Close above the high of the low day. Now, obviously the market's not closed yet, but this is what we're looking for in a bounce off of a level of support. So as it stands right now, we have that close above the high of the low day. Now, Art asks a great question. How many Caholds do we need to see before we're getting comfortable? And that answer is up to you, right? Because there most certainly are traders who would take the first close above the high of the low day, which in fact would have been this day right here, December 24th. Would have been the close above the high of this low day, if that were our low day. But since that didn't break out of that resistance level, it moved up, didn't break out of the previous resistance level. Now we keep moving and looking for that entry. Now, some traders will get in on the close above the high of the low day. Some traders will use that as a signal to wait for the setup, which would be the break above the resistance level. And you can see what's kind of happening here in the fact that this stock, which is in a downward trend, it's now going sideways, has maybe backed off a little bit. So something to think about is that in a stock that is not already in an uptrend, or hopefully this answers your question, in a stock that maybe is not already in an uptrend, some traders want perhaps to see a breakout of resistance following the close above the high of the low day, right? As an additional confirmation. Not necessarily, okay, I've got this close above the high of the low day, and then I've got another close above the high of the low day, and then I've got another close above the high of the low day, but simply a close above the high of the low day followed by a resistance breakout. So some traders might take this trade and say, look, I'm going to wait for the break above this high. So we'll do that. We'll put that trade in here, and we'll kind of continue on with this process here. All right. Thank you, Irod. Appreciate you being here. So here's what I'm going to do. I'm going to right click and I'm going to come down here to the buy button and I'm going to create an order to buy. But I'm not just going to buy, right, just out of hand in this particular case. In this example, we're going to say, fine, let's wait. And it's going to say, if this happens, then take action. If this, then that. So what I'm going to do is I'm going to edit this. And I'm going to say, look, if price breaks above that resistance level, because I have that close above the high of the low day, and here's that next level, and a break above the resistance level, which we'll call 146.70, then get into the trade. It's currently trading at 146.57, so I'm going to make this order a buy stop. And by the way, if you want to learn more about stop order types or order types, right? You want to learn more about order types, Brent Morris has a great webcast, actually a number of great webcasts talking about order types. So I'll let Brent, if he can, put that link out there in the chat so that you can go check those out as well. But we're going to make this a buy stop, which is stop, don't do anything until price gets above 146.70, then put it out as a marketable order and try to get into the trade. And we can specify again the activation price, 146.70, but not the execution price, not where it fills. We're going to make this good till cancel because it might happen tomorrow. It might happen later this week. We don't know. We're willing to take that on this break back up to the upside, or this move back to the upside. So this is a bounce followed by a breakout of resistance level. But what we've done is we've clearly delineated what that bounce looks like. And hopefully, thank you, Lola. I appreciate that actually worked for you in helping to understand that close above the high of the low day description is working for you. So I'm going to go ahead and I'm going to click on confirm and send. We're going to read through this order. We're going to say, fine. If price breaks above 146.70, 146.71, then enter the trade. Else, wait. That's what this order says. So I'm going to go ahead and we'll go ahead. I'm going to put this in our, you know what? I'll just put this in our stocks section here, and we'll go ahead and click on send, and we'll fire that order off. And that order is waiting for that circumstance to occur before we get a bounce, or before we get an entry. The bounce has occurred. We're just simply, in this case, waiting for confirmation. So because it's already in a downtrend, or is still in a downtrend, hasn't turned around, started to establish a new uptrend, to go back to Art's question, to go back to Randy's question to begin with, this is maybe the way that some traders might deal with getting into a trade on a bounce when it's in a downtrend, or when it has been in a downtrend and it looks like it's reversing, is wait for some additional confirmation. All right, let's look at a couple of other examples here. All right, let's take a look at Delta Airlines, and this one might be a little bit different. Let's go to Delta Airlines, DAL in this particular case. And so what I would argue is that Delta is still in an uptrend at this point, right? Okay. And in this particular case, we have something going on here that we want to pay attention to. Still in an uptrend. 50-period simple moving average is moving in an upward direction. Intermediate to long-term uptrend. Intermediate term perhaps to short-term downtrend. But that's giving rise to this potential for a bounce. So what we're looking at, if we zoom back in here, is we're kind of seeing that little skewed double bottom type of pattern. So here's a low, here's another low, and you see we have this hammer-like candle down here off of that level of support. I'm just going to draw the level of support in here so that we can establish where it is that we're bouncing from, somewhere right around that area. Doesn't have to be particular, doesn't have to be precise. We're just trying to define where that level of support is. So now things change a little bit, right? Now things become a little less, there's maybe a little bit less requirement. I'm just going to remove a couple of these lines here. A little bit lower requirement for a breakout of a resistance level, if you will. Let's put it that way. Simply because the trend of the stock is still in an upward trend, right? Longer term trend. So we have a low day right here, okay? And technically, if you look at this particular pattern, we had a close above the high of the low day yesterday. That would have been that red candle. Still, it closed above the high of the low day. The low day comes on this kind of dragonfly hammer candle, right? Or we might call that like a, you know, like a little tiny sledgehammer, right? A little ball peen hammer. But it's got a long shadow or long handle or long wick down to the downside. We see kind of a big power reversal here to the upside. Price gets pushed higher. This candle right here on 1-6 represents a close above the high of the low day. Today, we get another move above that high of the low day, and we're right up against that moving average. Now, here's something to think about. If, in terms of this trade, if there is an obviously visible level of potential resistance, like we're right up against holistic, I think this is a good way to kind of think about this. We're right up against that moving average. We're right up against a horizontal resistance level. If that's the case, we still had kind of this bullishness, and we still have the bias of the trend going in our favor. So one of the things that some traders might do in this particular point in terms of entering into a bounce type of trade here, where we have a clearly defined bounce, but we're potentially running into a resistance level, would be, rather than waiting for that circumstance to occur, the break above the resistance level, maybe scaling into the trade. So taking a small portion of the trade and putting it on here. And then when price breaks above the resistance, which I'm going to call in this particular case, right up here around this 64, or excuse me, right around that 62 mark or so, we'll call that our next level of resistance. So here's what we're going to do. Okay. So here's what we're going to do. We're going to scale into the trade here. So let's say we're going to buy 100 shares total. We've decided that is our position size. So a trader in this particular case might simply go buy and enter a position. I'm going to edit this position or enter this order. And I'm going to say, all right, fine, we'll buy 50 shares. Okay. And then I'm going to do this in two orders. I'm going to click on first trigger sequential. Okay. And so what I'm going to do is I'm going to create a duplicate order to buy another 50 shares, but I'm going to make that duplicate order another buy stop like we did before. So I'm going to go ahead and I'm going to get into the order right now. All right. I'm going to give it up to about 61.30 to get into the 50 shares to begin with. And then I'm going to say, look, if this breaks above that 62, we'll call it 62.50. If this breaks above 62.50, then we'll add another 50 shares so that we've got our whole position working once this gives us that additional confirmation. So I'm going to make that second order a buy stop at 62.50. And again, that's not going to specify. So if this gaps up, then very likely both of these orders may hit. Now, if it gaps up right now and the first order hadn't hit and it goes beyond that limit, that first order is not going to fill, and then the second order wouldn't fill. So this does give a bit of protection against a gap. It's going to keep you from getting into the trade. That protection exists up to or beyond the 61.30 level. We're going to kind of use this as a means to scale into this particular position. We're going to click on confirm and send. And we're going to read through this order, make sure that we're aware of it, make sure we're aware of that stop order since it's a buy stop. The reminder that that buy stop, even though it's a buy stop and not a sell stop, that buy stop order doesn't guarantee at what price that order will fill. And then we'll go ahead and we'll click on send and we'll get into the trade. Now we filled that first order. We're in with 50 shares. And now we've got an order sitting out there to get us into the trade if the price of the stock, to add to the position if the price of the stock goes above 50 or above this level of resistance here that we said was at 62.50. Okay. So the difference here is we had a close above the high of the low day and an uptrending stock. And we were looking at getting into the trade a little bit earlier and then adding to the position as we had additional confirmation. Okay. That's example number 2. Example number 3 is one that's kind of interesting, though, because it represents a failed bounce. We're going to go to DD here. This is DuPont Dumors. And one of the things that I noticed is downtrending stock, but we were getting kind of that milquetoast bounce here. And notice what happened. Here's our low day in that pattern. And this maybe goes back to what Art was saying. Just because we have a close above the high of the low day does not guarantee that price is going to turn around. So here we have the low day, right? That red candle right there. We have a close above the high of the low day, just barely. Actually, we don't. Here's the high of our low day, right? 77.25. And our close on this day was 76.82. Let's see, 77.20. It was right at it, 77.25. And this one was right at 77.24. So we never really had a close above the high of the low day in this short-term pattern. So again, this is why sometimes traders look for evidence of that potential bounce, because it never really gave us that evidence, right? We never got the close above the high of the low day. We got trades above the high of the low day, but it never really closed there. And then what happened? It failed. It came back down and gave us a new low. So now what we're looking at is this low as the new low. So now we're looking for an entry into this trade above the high of that low day. Let's see if we get it the next day, and we don't. Now we've got a new low day, and it's still moving in a downward direction. Now we have an upward trending day, and let's see if we get a close above that level. Not there, and not there, and not there, and not there, and here we are. So here's our new low. So what we're looking at for a potential reversal here, if this establishes as a level of support, which it's starting to potentially do that, would be a close above the high of this low day, which would be somewhere right around here, the 75.73. We don't have it yet, but we're going to go ahead and put in a buy stop order to enter that trade. We're going to click on buy, but we're going to make this that confirmation. We're going to click on edit, and we're going to say if this closes above the high of the low day, which in this particular case, the high of that low day is right here, and that is going to be 75.79, which is what we want to be our trigger price for this stop order. So we're going to make that a buy stop order. We're going to click on confirm and send, read through that order, making sure that we're aware of the limitation of that order, that stop order. We're going to go ahead and click on send. And now that order is out there waiting to close above the high of the low day. All right. So what we've done is we've done 3 examples here of different characteristics of that bounce. The clear evidence of which comes in that close above the high of the low day. And if you want to learn more about this particular concept, pop right on over here to Trader Talks webcasts. Make sure you click on the subscribe button if you've not done so already, and just type in the letters CAHOLD like we talked about, and you're going to see a number of webcasts that talk about that close above the high of the low day and understanding a bounce. And here's another great one. James Boyd talking about trading with technical indicators, understanding and trading a bounce setup to reinforce the things that we've been talking about. And if you want to learn more about all of our slate of offerings here at Schwab Coaching, come on over here to schwab.com/coaching for more information. So let's pop back over here. And just that quick reminder, we talked about bounces today. We talked about using this as an entry into trades for both trades that are still in a downward direction, but also those that are in an upward direction. We looked at a couple of examples on the chart. So my thanks to Brent Morris for helping out here. My thanks to our great production staff for helping us out as well. And for all of you in this discussion today, thanks for being here. Thanks for joining us if you're joining us in the recorded version as well. And we will see you again very soon. Take care, everybody. Bye-bye.